Ni za ndani Marekani nikikupasha yanayojiri yanavyojiri yanapojiri leo.
Za ndani Marekani.
Thank you so much. Yeah, you're on za ndani Marekani, raw and uncut, nikikupasha yanayojiri yanavyojiri yanapojiri. Mimi ni yule wako Tunishira.
Yes, that's how it goes.
Welcome to the Connect series.
Hi everyone, this is Solomon. I'm joining from Massachusetts.
Awesome.
Wonderful.
In a small town called Waltham.
Great. That's awesome. We avoid saying that the name of your state.
I understand. You can call it whatever you want. You can call it Mass.
Well, we try to be safe. We try to keep it safe. So
yeah. Hard one. That's the hard one for sure.
Yeah, going good. So we're just gonna take a few minutes as we allow other members to join, and of course continue receiving guys as they come in. I see we've got Katie. Katie, hi. How are you? Welcome. And did she just run? She ran. She just ran. I want to do some giveaways for some of these things that you're seeing on the screen. This particular Connect series has been sponsored by LemFi. Talking about LemFi, among the things that you can expect is the most competitive exchange rates, very high sending limits. Right now, you can send up to $8,000 per day. Using LemFi, you can be able to send money to Kenya and also receive from Kenya as long as that money is on M-Pesa. And you can be able to use pay bill services to pay for electricity, DSTV, water. And of course, you can be able to shop for your family or friends. Just tell them to do the shopping, pick the items, and they send you the till number. If you have friends who are having a good time on a Friday evening, this festive season, tell them, mumunya kitu, alafu tuma till number. Katie, are you there? Please say hello to us. And Catherine Juguna, karibu sana. Please join us and say hello to us and tell us where you're joining us from.
Katie from Seattle.
Katie from Seattle.
Yep.
Awesome. How is it where you are? Is it flooding? Down the road from where I am, it's flooding, but
I've been lucky. No floods, but lots of rain.
Oh, cool.
Yeah.
Right. So I'm wondering if Katie and Catherine Njuguna are the same.
No.
Okay.
People.
All right. Thank you, Katie. This is the Connect series. We would be happy if we can have people show their faces. It's not an obligation. Catherine Juguna, please unmute yourself so you can say hello to us and tell us where you're joining us from.
Hi, I'm calling from Federal Way. So, yeah.
Awesome. How is it in Federal Way? Do you have people that have been affected by the flood?
Not that I know of. I don't live here, but I've been here all day. So, yeah, I don't know if anybody was affected.
All right. Where do you live?
I live in Tacoma.
Oh, Tacoma. Awesome. I'm going to be in Tacoma tomorrow. I want to go to a shop there called Lukinya. I want to go and get some kavagara. You know the kavagara unga?
Yeah. Yes, I have nimekula hiyo.
Have you tried it? How is it?
I've had the unga ugali. It's okay.
Mm-hmm.
I found it too white for me, but I've tried it. It's okay.
I'm told there's two grades. There is the white one, and there is another grade that's more like not sifted that much. So
I
probably
think I got the one that was sifted because it's too white.
it didn't feel like ugali. It's too white to be true ugali.
Yeah, at least we need to get some vitamins or kind of that fiber. Maybe I'll try the other one. I didn't know that there was the other kind.
Cool. I don't want to give Kavagara too much on this one because they've not sponsored this show. But I think for me, what is most important is that we're able to actually have a conversation about generally things that affect us. And if some unga is good and it's out there, it's good for us to know how to get it. I see Ifrit has joined us. Ifrit, say hello to us and tell us where you're joining us from.
Hi, everyone.
Hi.
Hi, my name is Ifrit. I'm joining you from Seattle, Washington, in a city called Lakewood.
Okay.
And I'm ready to learn about my retirement.
Welcome to the Connect series. Our gentleman is here already. He came in before everybody, so he must be very excited to give us knowledge. And so I'm equally excited because I can't wait to share this. Is it flooding in Lakewood?
No. Just drizzling at the moment, but it has really rained a little bit.
All right.
Yeah, but now low.
All right. Bernard, please come in, say hello to us and tell us where you're joining from. Bernard Ngari.
Hi, all. Zandani and Marekani.
Thank you so much. Yeah, you're on Zandani Marekani, raw and uncut. Nikipashana Nigeria na Nigeria na hapo jiri mimi ule wako tunishira.
Yes, that's the way it goes. I'm Bernard Gary. I'm here in Lacey, Washington. Thank you.
Awesome. Are you guys affected by floods in Lacey?
Oh, not yet, man. We are good here.
Awesome.
Sorry for you guys in Kent. We are praying for you.
Thank you. Yes, Zandani Studios is in Kent, so almost right in the middle of where the action is. So I was just talking about making pay bill and till number transactions. And of course, you can also make local transfers. Can you believe that? You can also be able to transfer money directly to a phone number or to a bank account from here. And the first time you send $50 as you join, you get $20 sign-up reward. And of course, if you can invite other friends, you also get $20 when they send $100. So over and above that, for every transaction that you make, when you make one that is $50 and above, you earn some reward points which you can redeem as cash down the line. So let me introduce Anthony. Anthony, please say hello to us and tell us where you're joining from.
Hi, mimi naitwa Anthony lakini kwa jina aka Pipe. Joining you from Lakewood, Washington.
Right.
Kuingia Zandani, Marekani, anavyojiri, aruvajiri. Napenda umalizia hapo kwa aruvajiri bwana, umekataa kuingiza hiyo.
Wacha nikupatie hiyo kwa sababu ya kujaribu.
Sasa tuko masomo, sisi iko ndani.
All right. Land Force One, karibu sana. Say hello to us and please tell us where you're joining us from. Then we start.
Yanavyojiri kaskazini.
I think I might have to change my brand now. Everybody is taking it over. Own it. Run with it.
Wow.
Oh my goodness.
Hey, how are you, Tony? How's everybody?
We are good. Thank you for joining us on the Connect series. Karibu sana.
Yeah, thank you. This is John Toy from Arizona.
Oh, great. Good to have you, man. Good to have you.
Thank you, brother.
Karibu sana. So, ladies and gentlemen, welcome to the Connect series. This particular episode is sponsored by LemFi. LemFi is a money transfer platform that sends money to East Africa from 5 send regions. I'm talking about UK, US, Canada, UAE, and Europe, and now working towards sending from Australia. we send to Kenya, Rwanda, Uganda, Tanzania. That is the East African corridors. And of course, beyond that, we have Asia, China, India, Pakistan, and of course, we send to Brazil. And we're working on other areas where LemFi will be able to send money to. As you can see on the screen right now, water bottle over there. I've got a LemFi branded cup. I've got some dispenser there for your towels. And of course, I've got t-shirts, as you guys can see over there. We're going to run a little raffle at the end of this and see who will be eligible to get. But without further ado, allow me now, ladies and gentlemen, to introduce the speaker of the day. This gentleman is knowledge in motion. Some people have called him Moha Wajichopefu. I saw him and I thought he was familiar. I didn't know it is because he looked like someone I thought I knew. And until we had a little conversation, and when he did, he wowed me with the knowledge that he's got. And so, ladies and gentlemen, I want to invite the speaker of the day, Mr. Kennedy Mwangi. I would say a lot, but I like to not say too much about someone when I'm introducing them because I might say things that they don't want me to say. Please let us welcome Mr. Kennedy Mwangi.
Ooh, thank you so much. Thank you so very much. Ungenipatia hiyo makofi yako pia. That would have been wonderful.
Ndio.
Oh my. Thank you. I appreciate it. Wow. Anyway, yeah, that's wonderful. I wish I knew the Alfajiris and anything. I would also join on to that. But I'm very humbled to have this opportunity to have an opportunity here to speak and share knowledge to all those who are hearing and listening from wherever you are. If you could as well take an opportunity, if you can, to type on the chat anything that you hope to expect or anything that you wish to pick up from the call today over the next few minutes. If you have particular questions that you have in your mind and you hope I can just give you any professional insight or knowledge on, I would be more than happy to look at some of those questions and answer as we go. If questions come up as we go, feel free to also put them in the chat. But if there's anything you're struggling with or you've been curious about and you've just never got to it yet, you can feel free to ask there. Also, on the screen there, the QR code that is showing has my contact information. So if you want to plan any particular call by yourself to have me share insight even in private, that's something that we can also plan and do. You can either call me, shoot me a message on my work phone number there, or you can also book time on my website, which is also part of that QR code as well. Otherwise, thank you all again for creating some time here today. Just brief introduction so that I'm not too much of a stranger to us all. I know I'm not a stranger to some people here that I know, and I appreciate you all so much for being here to support. Others have already taken the knowledge in, and others already have so much knowledge. I know Sam Simon is also in the financial world and a financial professional, and they also still come in just because they want to either continue to sharpen their knowledge or to support. I appreciate you guys so much. So brief introduction, Kennedy Mwangi is my name. I am based in Kansas City and I work with people all over the United States. I am a financial advisor. I help people mostly through Northwestern Mutual Wealth Management Company. However, I can help people through other companies as well, away from Northwestern Mutual. That's just one of the SROs or the companies that I help people with. Otherwise, away from that, I'm also from Kenya, East Africa, born and raised in Western Kenya. I played a lot of soccer when I was a younger person, and I still have that passion until today. And then I later came to the United States to pursue my master's in finance and business administration. After that, I got into financial services, and I've been doing this about half a decade so far. and it's been so wonderful, and I have so much fun just helping people to have more clarity and confidence when it comes to their money, their businesses, taxes, and just figuring out how do we connect all the goals that we have in our minds with the money that we have in our hands. How do we create a bridge between those two things? Are we going to be okay? Are we ready for retirement? Are we going to get there? And when we get there, are we going to survive through retirement? How is life going to be? And those are some areas that we work in. So today I will cover mostly very general concepts on financial planning, and they won't be too particular, especially because this is not financial advice. This is general financial education. For you to get financial advice, I would highly recommend for you to speak to a financial advisor. And I am a financial advisor. You can talk to me in private so that I can assess your particular situation and give you any recommendations that are particular to you. Away from that, I'm also married as well. And my wife lives with me here in Kansas City, and my cousin here as well. The rest of my family is back home in Kenya. I believe my wife has a very different name, so she could be one of the people on the list here, even though she didn't introduce herself. So I'm not so sure, but we'll see. Yeah. Otherwise, I haven't seen any question on the chat yet. I wonder if people are just open-minded on what to pick up from the call today. Maybe that's the situation.
Yeah,
But
probably the questions will arise as they go on.
yeah, probably questions will arise as we go on. And talking about money and financial planning and building wealth and figuring out, are we going to be okay? I will share my screen here and show something fun that is simple, but is also fun about compounding interest and about growing money. And this is kind of the middle of my conversation, but it's a fun piece and an interesting piece that I would like to share. So let me see if I could actually share my screen by chance. Here we go. Thumbs up, people, if you can see the screen there, or clap or something.
It is on.
Okay. All right. Wonderful. Okay. So on the screen there, you should be seeing something talking about the power of compounding, the power of compounding. And this here, just as an introduction to what I'm talking about today, I'm showing on the screen a picture that shows what if you decided today, or what if someone decides that they want to have $1 million by the time that they turn 65 years old. If someone decides they want to be a millionaire or want to have $1 million by the time they turn 65, and this image here also assumes that this person starts to invest money, and they invest their money in an asset, whatever asset it is, that gives you a rate of return of 7% every year. 7% every year is quite a mid-ranged. It's not an over-ambitious rate of return or profit that you could make of an investment. It's lower than the average that the S&P 500, which is the 500 largest companies in the US, has averaged over since when it started counting. So, which is about 10% now, more than 10% with the recent bull run in the stock market here over the last 3 years. But I'm just saying that to show that 7%, we're not being over ambitious. It's just not a bad rate of return. If that person is 25 years old and that means they have 40 years to invest, between 25 to 65, that's 40 years. And they start investing money into this account that will give them a 7% rate of return every year. That person only needs to be investing $381 per month into that account that gives them 7% every year. When they turn 65, without doing everything else, just investing $381 per month, which is about $4,500 in a year, they will wake up having $1 million at 65. Of that $1 million at 65, 182,000, close to 185,000, will be the amount of money that they actually contributed. That's this 4,500 every year times 40 years comes to that about $185,000. And all the rest of it, 817,000, would be the gains that have continued to compound in interest, and they end up having $1 million. Quite interesting. That's why Albert Einstein said compounding interest is a wonder. It's one of the wonders of the world, according to one of the smartest people on earth. And if this person does not take it enough seriously and postpones this a little further, and they start investing at 35 years old, because maybe for any reasons, maybe life was just putting us on a treadmill. Now, because you only have 30 years to invest between 35 to 65, you now have to invest $820 into that same account that gives you 7% every year in order to wake up with $1 million by the time you turn 65. This person will now put in 300,000 themselves, and the gains would be 700,000. Still not a bad scenario, but you can tell there how much time or passing time between the 10 years that we lost costs us between $381 of investment to over double of that, 820, because we lost those 10 years that we could have started early. At 45, and this is, I've explained it already, so this is 1,900 at 45, because you have 20 years to invest, and close to $6,000 every month that you have to invest if you only have 10 years and you're like, I want to run like Kipchoge on the last mile to hit $1 million in 10 years. And you'll put in most of that money. Close to 700,000 will be portions of what you put in. Only about 300,000 of that will be the gains. What this image is showing us here is how discipline and consistency can be a very good wind to carry us into building wealth in a sustainable way. And again, this is very, very conservative rate of return, I would say. When you are a more aggressive investor, when you're talking about investing in particular or individual companies in the stock market, we're talking about much higher rates of return every year compared to this 7%. Yeah, so that was just a place to start there. And again, just to remind us, we can keep the questions going on the chat as we go and as they come up. Now, I'll say one more thing. There's a difference between saving money and investing money. Some of us here probably are big fans of putting money inside of chamas. And I hope I'm not scratching anyone's heart. But many of us, one of the things that we were raised and taught to do is to put money inside of a chama. Now, if this wonderful gentleman or lady who's 25 years old here, instead of investing this money inside of an account that gives them 7%, they decided, you know what, I have a chama with friends, so I'll be putting $300 every month into this chama. If they stick onto this chama until they're 65 with a wonderful group of friends and they share chai and mandazi every so often, at 65, guess how much money they would have inside of their bank account, or how much they would have been receiving from the chama? It would be this $182,000, because that is a strategy of saving money, but the money is not growing. We lost the 40 years of our money just coming back to us, the same amount that we put it in, but it didn't end up growing, which can be a big drawback. In fact, you actually lost money if you did that, because 40 years later, the cost of eggs, the cost of milk, the cost of rent, the cost of everything has gone up. Inflation historically has been are an average around 3%, closer to 4%, and even higher right now in the last few years. So if your money is not sitting in a place that it's growing by 2.5% and above every year, on average, then you're actually losing money just by holding cash and not investing it. So let's stop guessing and start planning and asking ourselves, what are the places that are available for us to store and to grow our money? What questions do we have? Some people have questions. Do I invest here? Do I invest in Kenya? What if or in Tanzania or in Africa or in another country? Or what if I'm only going to be here for a few years and then go back? How do I work that out? These are some of the questions that I get to see and answer whenever I get to work with people. Otherwise, after sharing that, I would like to pivot here, change gears a little bit, and talk a little bit about financial planning. Of course, this is pretty exciting, making money, having I have a lot of fun talking about investing and growing money. It's a very fun conversations. 401ks, how do they work? Should I even put money into a 401k or a retirement plan or a pension? How much should I put into it? Roth IRAs or for retirement or investing for children, 529 plans, or investing in bonds and stocks and mutual funds, index funds. Very, very fun conversation. And again, those are details that we can always dive deeper into and talk about thousands of different mutual funds options that you can have. And I usually consider building wealth and growing money like that as a middle part of building a financial plan. So I'm going to use this image that's currently on the screen to describe a little bit about what does it mean for us to have a financial plan? How can we have a financial plan? And the surprising thing that I'll probably say to some people is each and every one of us here on this call has a financial plan. Each one of us has a financial house that we're building. It's just a question of, is the financial house that we're building a stable house, or is it one of those houses that is bent a little bit on one side, or is it a house that floods? I heard there's some places that are flooding. There's places that it's leaking water, or is it a house that's upside down? Each and every person, whether you talk to a financial advisor or not, you have a financial plan. And I want to just touch briefly on what's that financial plan and how can I simplify it for you to understand what are the basics of it. So this image on the screen here is going to help me explain that. And I usually like to say financial planning is the same thing as building a house. It's the same thing as building a house. And this illustration here is going to simplify it very, very much so, because it's more complex than what this is going to show on this image. But just to show you a little bit of how complex that can be, when you say, I work with a financial advisor, or I have a financial plan. This is just a sample of what a financial plan might look like. These are not real people. It's just to show you an illustration. This is a couple, Bill and Mary Dixon, working with a financial advisor, and this is their financial plan. This financial plan is a document of 65 pages, a whole document for their financial plan. It shows a summary of their goals, where they're trying to go. It shows their balance sheet as of currently. It shows what coverages they have, their projected net worth if they continued to grow money. It shows strategies and what they're implementing to protect their wealth, what they're doing to grow their wealth, what investments they're putting their money into, and what the projections of these investments are going to become into the future. And it also is able to show what retirement looks like for them. So to develop this kind of financial plan, and this is something that we are able to do for people that we work with, it starts with a conversation. And one of the questions that I ask people is, where are you trying to go? What are your goals? What's your vision? What year are you looking to retire? At what age are you looking to retire? and how much money in today's dollars do you want to retire with. So for example, I say, assume today you're that age that you want to retire, whether 60 or 65. How much money every month would you say would be enough to give you the life that you want every single month? Like if you had investments and these investments were giving you this amount of money every month, how much money is that you'd feel this is comfortable? Some people say, I think if I got $6,000, that would be okay, because at 60 or 65, the kids are grown, the mortgage is paid off. Or other people say $10,000, other people $15,000. And many people, they want to maintain the same lifestyle that they are living right now before they are retired. They want to have about the same amount of income right now. So this is able to project, show with what you're doing right now, how much money are you going to have by the time you want to retire if you kept doing whatever you're doing. And if you do so, are you going to be on track for retirement or not? So this is showing their total net worth, assets, liabilities, projected net worth a little bit here. This is showing what happens if one person becomes disabled in the family and how will that actually affect your finances. This here is the other couple, the other person becoming disabled as well. One of the interesting pages that usually comes up on a financial plan, which brings things quite on a standstill, is on the retirement strategies, whereby we talk about how on track or not we are for retirement. So for example, Bill and Mary Dixon here, this is showing they retire at 65 years old. And at 65, after 65, this is the money they made at 64 years old, that green there. And then this yellow here, I hope my color direction is okay, is showing that now Bill and Mary Dixon are starting to pull money out of their, we call them tax deferred accounts or qualified accounts. This is money that they saved for retirement, such as 401k, 403bs, 457 plans. So that's why you see that yellow. They start taking money out, the money that they said they want to retire with every single month for the rest of their life at 65. And as you can see, they run out of money from the 401k here, where the yellow ends at about age 80 years old. And then from there, there's this red here. This red that you see on the financial plan that is showing that there's a shortage. From 80 years old, for the rest of the life that they live, they'll actually not have the ability to live on the amount that they say, this is the amount of money I want to have every single month for the rest of my life. And it's not as simple as the same amount. You have to think about, and this financial plan, we are able to run it in a way that puts in the impact of inflation. Because if someone says, I want to have $10,000 by the time I retire at 60 years old, and let's say you are 30 years old today, $10,000 in today will not be the same $10,000 30 years later. You want to assume that you probably need over $20,000, over double or close to it, to purchase exactly the same things that costed $10,000 30 years earlier. So this math is able to put in that into the context and show you how much is $10,000 going to be when I retire, to make sure that the investments that I'm making, they have to make enough rate of return to keep increasing how much I get from 65, even through my retirement years, without running out of money. In this illustration, they only start surviving on pension here and social security, which is the dark green bottom here. On this thing on the screen as well, I hope this is not too complex, but the broken line on top is showing money before they pay taxes. Once they pay taxes, the straight line is what is showing that. And again, this is just an example of what a financial plan looks like there. So part of our work is to help people to reduce how much taxes they have to pay, in order to see if we can siphon some of the money that they end up paying in taxes through strategic planning into increasing how much money they can continue to have for retirement. And then for this other shortage, we are able to see, okay, if we'll have a shortage when we retire, what can we do today to make sure that we cover that shortage? What if we invested another $100 a month or $200 a month into a Roth IRA or into a 401k or into any other sort of account? How would that work? So again, that can be a little bit more complex, but that's what a financial plan looks like. It's not something we can do at home. It shows us different options, estate planning, and all those pieces. But that's not where I was going. That's the full picture. But just to talk about the basics here for now, financial planning being like building a house. If we are to build a house, we already have the raw materials that we need, we have the land, we have everything that we want to build this house. We're just ready to go for it. And someone can unmute and tell me so that I don't feel that like I'm alone. But if you have the land and you have everything to build, where do you usually start to build the house? Where do you usually start building from? Anyone?
The foundation.
Okay, yeah, that's very correct. You usually start to build that house from the foundation. Some people call it msingi. I don't know what you all called it in your mother tongue, but any house, at least that I know, I have not seen others that you don't start building from the foundation, but a house that lasts usually will start by building a strong foundation to make sure that you're covering gaps of anything that can bring that house down, whether it's the floods that might come, whether it's the winds or the tornadoes of cancers. You want to make sure that you are building a strong foundation that can sustain all those things so that whatever you build on top of that house is actually going to be sustainable. And the foundation of financial planning is what we call risk management here, and I'll touch that into more detail. After you've built the foundation of the house, which we call risk management, you move on to building the middle part of the house. That's what we call wealth accumulation here. This is the fun part of the conversation, talking about how can we build wealth? What is the rate of return? What about taxes? What about inflation? Who is winning? What kind of portfolios and mutual funds are leading out there, and hedge funds, and all those fun pieces of conversations. But this is all about building wealth and growing that money. And on the roof of the house, we call it strategic distribution. And strategic distribution here, we talk about after you have managed your risk, you have built wealth. For as long, this is the longest part of it, building the wealth. You're just growing money, investing money, and making sure it's growing for you. Here on the roof, we talk about strategic distribution. And here we talk about how do we make sure that you do not outlive your money? How do we make sure that you don't retire at 65 and then run out of money at 75, 10 years later, and then we forgot our grandmothers, and God gives them and our genes very long life, and we probably will live to 95. And many people here are in the United States, and they say, I don't think I want to depend on my children in those years. I don't think I want to count on them, probably because of the experiences that we've had with our own parents, who we are their retirement plan. Amen to everyone who's a retirement plan for their families. But some of us don't want, or some people I work with say, I don't think I want that. I'd rather plan for myself and know that these many years, for example, if you retire at 60 or 65, God gives you a long life to 95. That is a whole 35 years of your life in retirement. 35 years of life in retirement. Oh my, I'm writing using a mouse, so don't judge my handwriting. I can write better. So 35 years in retirement. But in these 35 years, we are probably seeing the doctor more because of our health declining over time. In these 35 years, we also have inflation and taxes being an issue, the cost of things continuing to go up. The cost of everything is going up. including property taxes for the house that we own, yet we're not making any more money. There's the cost of long-term care if we were to ever need long-term care or extended care. That's a better name for it. If we were to ever become frail and we just need someone to come into the house and be with us for 2-3 hours, that's also coming as an issue. Then there's fears about, is Social Security even going to be there for me or not? What about market volatility? The stock market being up and down, and that's where we have our 401ks or Roth IRAs. That's also an issue. Oh, what about my grandchildren? The Bible said a wise man leaves an inheritance for themselves and their children and their children's children. What about leaving a legacy? How am I going to leave a legacy if I'm not going to be sure that I can survive through these 35 years? So on strategic distribution here, after helping people to build the wealth, then we talk about how do we sustainably make sure that your wealth is growing through your retirement years, you don't run out of money, and we strategically distribute that wealth back to yourself in your retirement years, managing taxes, and just making sure that you're okay, and you know you're not going to outlive your money. So that's a whole different piece of the pie there in a sense. But even before starting to build this house, the foundation, the middle part, and building the roof of the house, two major things will usually come up even before starting to do all those things. And this is probably one or two of the things that people mess up the most on when it comes to financial planning. People don't do the preliminaries of starting to build. That is goal-based planning and cash flow management. These two things here, before even starting to build the foundation, we have to know, where are we trying to go? Where are we trying to go? If you went to an architect and you told them, I want to build this house, or rather, I want you to help me to build this house, and then the architect tells you, oh, sounds good. I'm an architect, I do a very good job. Okay, go home, come back in 1 year, you'll get a house. I don't think you will go back to that architect because he didn't even ask you, what type of house are you trying to build? Are you looking for a 2-bedroom, 3-bedroom, 4-bedroom? Are you looking for a ranch, bungalow, gorofa? What are you looking for? Mabati, simiti? What are the raw materials that are your preference? Just like building a house, whereby you have to have a sketch first, you have to begin with the end in the mind. It is very, very important to sit down as a family or as an individual or with your spouse and then ask one another, where are we trying to be in the next 3 years? Financially, professionally, career-wise, where are we trying to be? Short term, that's like 3 years. And then between 4 years to 10 years, that's like midterm. We call those midterm goals. Just have a general understanding. It doesn't have to be a perfect plan, but we're just saying, this is what we want to do in 3 years. This is what we want to do in the next 10 years. It's not an emergency, but over the next 10 years, those are midterm goals. Then we want to say, these are desires and goals that we have 10 years and above from now. And then finally, after 10 years and above, we have to also ask ourselves, when are we hoping to retire? At what age? Is there a point that we will want to actually slow down? If so, what age is that? And many times it's even more efficient to actually do that in a reverse engineering way, whereby you start with, when will I want to retire? If I will want to slow down, if I have realized that I don't have as much energy as I had 5 years ago, if I'm starting to see 1 or 2 white hairs pop up in my head and I realize, this white hair was not there a few years ago. If you are going out of bed a little slower and you're realizing that, oh my, the years are going, then we can start asking ourselves, when are we actually going to want to slow down and to retire? At what age is that? And then once you figure out that point, then you can start reverse engineering it to the midterm and also to the short-term goals. Very, very important piece of planning. If you forget everything that I said today, please take that home today and go ask one another what is going to happen in between those years, because that will include taking the kids to college if you have kids. That will be ready in another 12 to 15 years. Are we doing what we need to do to take advantage and be prepared for that? What if we can put $50 away per month into an investment for the baby or something like that? So that's one very important piece. And the second is cash flow management. Cash flow management is just a fancy way of saying having a budget or understanding your budget. Having a budget or understanding your budget. Cash flow management is all about getting to know approximately every month how much money goes out of your bank account, and approximately every month how much money comes in every month. It's a very, very, very crucial part of financial planning. I couldn't emphasize it more, really. So let me see if I could share monthly budget here real quick, just for you to see an example of that. Just one moment, guys. Okay, here we go. So I'll clear this from the screen. What you're seeing on the screen there is a sample of a monthly budget. Your budget has three major parts. You have what we call essential expenses. These are expenses that you cannot run away from. These are expenses that are almost like basic needs. Paying for housing, healthcare and insurances, transportation, paying for your car insurance, gas for the car, personal loans, student loans, credit cards, and then household groceries, dependents or children. Those we consider all those essential expenses. That's one piece of the budget, and then the other is discretionary expenses. Discretionary expenses, this is kujibamba. This is doing those things that we don't have to do them. We're just doing them because we find it fun. Vacationing, subscriptions, giving money to charities, contribution to different events, eating out, brunch, hapa na pale. For those who are friends to Huru, drinking uji here and there, so discretionary expenses. That was a joke. I didn't hear anyone laugh, but anyway, so discretionary expenses is those things that we don't have to do, but we still engage in them. And then we have the third part of the budget, which is saving and investing. We also have to ask ourselves, of the money that we make every month, how much are we putting away into saving and investing for our future? What is that meaningful and sustainable amount that we are consistently putting away for our future? There is what is called the 60-20-20 rule. You could have heard it before. It says 60% of the money that you make, you should aim that not more than 60% goes to essential expenses. Some people ask me, how much is too big of a house for me to buy? How much is too big of a car for me to buy if I get the money and I'm working? Essential expenses, you should aim that the total on them don't go over 60% of the monthly net income that you actually receive. And then 20% of your income is what is recommended for you to be putting towards having fun. And this is the good thing about financial planning, that if you have a financial plan, you even have money for fun, because sometimes it feels like we don't have money for the essential, we don't have money for saving, and we can't find money for entertainment as well. And then the last 20% is what you should aim to be putting away towards saving and investing. So 60-20-20 rule: essential expenses, discretionary expenses or fun and entertainment, and then saving and investing. Second thing, before starting to build that financial plan, we have to have that rough number of how much comes in and how much goes out every single month. That way, we can be able to see how much surplus or deficit we have in our budget every month. Whenever we know this surplus, let's say we know our budget every month allows us to have $2,000 extra every month. Now we can say, okay, now, if we have $2,000 every month, maybe we can start investing $800 for some of these goals that we listed as part of our short-term, mid-term, and long-term goals. And you want that to be about 20% of your of your income. If you want me to send you this budget sheet here, it's a very interactive tool. You put in the numbers, it does the math for you. It will tell you what what total amount you have on essential and discretionary, and how much you're saving and investing, so that you can try to see what you guys are doing, if it's closer to that 60, 20, 20%, or what you need to change in order to be closer to that. Anyway, I will touch on these pieces of the foundation here, and I think I'll open it for questions, and that will be probably it for the day. But up to that point, I'm just curious if there's any burning question, even before I talk about these pieces of the foundation here, or any word from Zandani Studios Alfajiri?
Thank you so much so far for the far that you've taken us. I don't know if you guys have been listening as I have so much in terms of the differences between saving and investing. I don't want to recap, but I just wanted to let you know that I'm attentive. And yes, guys, please ask questions.
Maybe one is to know, where are you based? Yeah, I think I want to know that.
Yeah. Great question there. So I am based in Kansas City, Missouri. This is where my office is, but I'm licensed to work with people all over the United States. So I can help people from wherever you are. I do a lot of my meetings, probably 80% of my meetings are on Zoom, because I get to work with people who are all over the US. And I primarily work with Africans living in America. I work with people from at least 20 different African countries who live in America, just working with them to help them have that clarity and confidence. Great question, Mr. Ambogo.
Could you please maybe mention when is the next meeting? I know I just joined and I missed the most part of the sessions, so I don't know when is the next one.
Okay, yeah. So I don't think we have planned when for the next one will be, but we will get a chance to share my contact information, so that people will have a chance to go onto my calendar and book a free consultation. You guys can, so long as you're coachable, so long as you're willing to definitely listen in, I'm more than willing, courtesy of the kindness of Tony Ngari, to offer free consultation and talk and help you guys have clarity. So Tony, you'll remember, and maybe even as I keep going, whenever I stop sharing my screen, we can share that contact information, so you guys can figure out how to reach me. But if Tony plans another call, he'll also tell us.
Yeah, absolutely. As we speak, there is the number is on the screen. It's in the scrolling message, so guys can reach out to you through that for a specific consultation. Down the line, I'll share. If you scan the QR code that you're seeing on the screen, it's going to take you to his platform, and you can be able to book a session.
Yeah, so I stopped sharing there for a moment, so you can see that run. Before I dig in onto the foundation of financial planning. These are the basics of financial planning. What are those things that are must-dos before we get too excited about building wealth? Any other person with a question or a comment so far? Okay. All right. So I will go ahead and pick up here on the foundation of the house. So again, for those who are just joining, summary, I mentioned that having a financial plan is basically the same thing as building a house. And we agreed here that if we were to build a house, you want to build it from the foundation first, then build the middle pieces of the house, and then build the roof. And I say that everyone has a financial plan. It's just a question of whether our house is upside down or if it's slanting on one side. But every house out there can take a good portion of renovation here and there. So this will help us to see what are some things that we can do to make our financial house stronger and build wealth sustainably for ourselves. We talked about the power of compounding interest and how starting early is a big benefit there. So on the foundation here, and one thing that I won't miss to mention is I mentioned as well the importance of setting your goals, and understanding your budget, knowing how much money goes out and comes in every month. And this is mostly designed for individuals, but I can talk differently more towards business owners and what business planning might look like. But for now, I'll just try to keep it basic in the meantime. And again, we can have those conversations privately as well. So on the foundation of financial planning here, there's 5 major pieces that come here onto the risk management, which I also like to call defensive planning. We are playing defense here. We are asking ourselves, what do we need to do to make sure we don't take steps backwards financially? So number one, I always encourage us to maintain that emergency fund. An emergency fund is money that is just there for emergency. Money that we know in case an emergency comes up, we can be able to use this money to sustain ourselves until the emergency goes away. The recommendation is usually for you to have between 3 to 6 months of your monthly living expenses saved at all times. So let's say per month, your expenses are 3,000. Some people in Washington are saying, I wish, and those living in more expensive states. So assuming your expenses every month are $3,000, then the recommendation is for you to always have an emergency fund of between $9,000 to $18,000, which is 3 times to 6 times of that $3,000. That means in case of an emergency, you know that your family or you can continue to pay for your normal monthly bills for the next 3 to 6 months as you recalibrate to figure out what you're going to do next, as you adjust to figure out what is going to be the next thing. Emergency fund, very, very important. If you're single, if you're renting, or if you don't have any kids, you want to have at least 3 months. Everyone should have at least 3 months of emergency fund. If you're married, if you have kids, if you own a home, if you have pets, then you want that emergency fund of yours to push more towards the 6 months because you never know what the child will swallow and will take you to hospital the next thing, or the house might break an AC, which might be $5,000. That's one expense, and things like that. So first piece there, have an emergency fund. Always please remember, emergencies will always come up. Very important piece of the foundation there. Okay, the recommendation of where to put that emergency fund is in a place that is safe. Please let's not put the emergency fund in a plot of land, something that is not liquid. We need this money in a place that is safe, but also preferably somewhere that the money is also growing. Salome, you have a question?
Sorry, proceed.
Okay, no worries. So that emergency fund, we want to put it somewhere like in a high yield savings account or a cash management account or a money market fund. Money that is liquid, money, and again, that's not financial advice. You can talk to me privately. I'm just giving you ideas here and education, but you generally want to put that money in places that is accessible and liquid. You can tap into it because that's what it's for. It's for the emergency. That's first piece of your defender in your financial plan before going to get excited to build wealth, which is playing offense. Second thing on the foundation of your financial plan, we call it income protection. Income protection. Here on income protection, you have to ask yourself, if I was to get injured, if me or my spouse or if you're single, you're your own backup plan, you don't have another income that you can rely on, we have to ask ourselves, if you are to get injured or you are to get sick and you're not able to clock into work to do the normal job that you do, and injury or disability does not mean you have lost your legs and your hands. Sometimes it's just headaches or migraines or dizziness. Sometimes it's anemia, or your blood count is just going low. Sometimes we don't even know what's happening. Sometimes it's anxiety. Sometimes it's mental. It could be anxiety. It could be depression. It could be asthma. Very, very small things that can have a very big impact. But they're things that, for one reason or the other, they're making us not be able to function as the 100% that we usually function on when we're doing okay. We have to ask ourselves, if that were to happen to us at some point, where is our next check going to come from to make sure that we can still pay for our house? Lack of income protection is actually the #1 reason for people losing houses in America on what is called foreclosures. What we call foreclosure, whenever someone loses a house, #1 reason in America is because, and my spelling there is going a mess, but #1 reason for that is because people bought the house when they could afford it. Everything was looking okay when they bought the house. We could afford it. Then one person got sick or injured, and they had to miss going to work for 6 months or 9 months. And then we didn't have enough of an emergency fund. And then things start dropping very, very fast on our financial house. And that's how many people end up foreclosing on the house. So how do we take care of income protection? Usually, if you work for corporate, most companies will usually have what is called short-term disability protection and long-term disability protection. For most companies, short-term disability protection will give you protection for about 3 months, which means if you're to be sick or injured and you're not able to go to work, they will continue to write you a check for about 3 months. And long-term disability, on the other hand, writes you a check for from about the 3 months going forward. So basically from the 4th month, after the 3 month has been covered by short term, and again, that's company specific. Some companies could be 6 months or different. Just check with your company. But long-term disability will write you a check beyond that and continue to write you that check until the specification of that company. It can be 2 years, 5 years, or until retirement. Now, if you have that, that's wonderful, but you should know it in your fingertips. What are my work benefits? When does short-term disability stop and when does long-term disability usually kick in? And again, this is mostly for full-time, and some companies will offer it for PRN. If you're part-time, some companies might not offer these benefits. Just depends with your company. Many people prefer to just send me the employee handbook. These are work benefits from HR. Review it and and help me understand what I'm not taking advantage of or what I should select to make sure I'm taking advantage of everything. Now, the challenge with those coverage from work is that they never cover 100% of your check. Usually through your employer, they'll cover about 50 to 60% of your check. A doctor in Oklahoma, I saw them at some point working for a company that gave them 73% of their check covered, and that was the highest I've ever seen. Otherwise, most companies it's about 50 to 60%. And if your employer is paying for it, then it's not cut from your check. That means that amount is also taxable. So once they tax the 60%, usually for most people, you'll end up with about 45% to 50% of the normal check that you usually make in a month. You'll end up with about 45 to 50% of it. And this again is dependent with your tax bracket and how much taxes you pay. But now just imagine it, you have 50% of your check and you're now forced to survive on that for the whole month during the time of disability. And that's another reason that still people are able to end up on foreclosure, just because it's still not enough. Especially if the average in America, once someone is disabled, people are away from work on average for about 3.5 years. So if you were to be away from work for about 3 years, is the amount of savings that you have and the disability protection you have at work going to be sustainable or not? The recommendation there is usually for you to get private coverage for the other percentage that's not covered at work. So if your work covers 60%, then it's recommended for you to cover the other 40% privately. And it's usually very affordable. You pay a very, very few dollars a month. It covers the other 40% of your check. So if you're making $10,000 a month when you're healthy, if you're injured or sick, instead of your income turning to $5,000 for the whole month, this 40% will cover the shortage and bring you just about at that $10,000 as if you're still working, so that if you're funding money for the children for education, you can keep doing that. If you're building an apartment somewhere, you can keep doing that. You don't have to tell them, now stop everything because I am not feeling okay until I get back to normal. Second piece of the foundation, very, very important piece. And I hope those of us, again, sorry for those of us who have flooding going on, but I think this kind of resonates with us when we talk about the flooding and things that can make the foundation of our house shake, and financial planning as well. So I'll talk about these three pieces here in a hurry, so that people ask questions. But
Yeah.
up to that point, any questions, or you want to say something, Tony, as well?
Yeah, I just wanted to let you know that we will be ending at 5:30. That's what we had said, and I would like us to provide like 10 minutes of an interactive session so that people can ask questions. Yeah,
Makes sense. Yeah, I can be done in the next 5 then, right?
Thank you.
Sounds good. So last 3 pieces in the foundation here. We're looking at healthcare and liability coverage here. This is simple. Let's have health insurance at all times. Healthcare is expensive in the US. A friend called recently, they didn't have health insurance. They injured themselves and they were told a surgery would cost about $57,000. And they were wondering, how do we get financial help at this point? But we don't want to come here, build wealth, talk about making money, making touchdowns, and then get a bill of 57,000 because we didn't have health insurance. So have that at all times. If you're your own business owner, have liability insurance just in case someone sues you and asks for $1 million because it was flooding and they slipped outside of your business. You want to have liability insurance at all times. And one thing I'll add on that is have umbrella policies for car insurance, because car insurance usually have a limit of how much money they cover. If your car is involved in, it hits one car, that one car hits another one, or it hits a Lamborghini, and the company says we only cover 250,000, an umbrella policy helps to cover the amount on top that's not covered by the basic car insurance or liability insurance as well. All right, 4th thing on the foundation is estate planning. Estate planning. Here on estate planning, we talk about 2 major things. Number 1 is having a trust, and number 2 is having life insurance. Having trust, a trust there, the trust comes with the financial power of attorney. And for those of us who work in healthcare, these are probably documents that you ask people a lot of. Healthcare power of attorney, financial power of attorney, and also it comes with a will. It's pretty affordable to establish a trust. You can do it yourself online, or you can also connect with an estate planning attorney, and I can help to connect you with estate planning attorneys in the state that you're in to have a conversation about establishing a trust. But it basically helps to protect your assets from going to probate court in case you're incapacitated, or even in case you pass away. If assets go to probate court, whether it's money inside of our bank accounts or any other assets that we own, it takes a very long while before that money gets to our people. It could take an average of between 1 to 3 years before probate court cases are had or finalized. And also it's expensive. You're looking at about 10% of your assets going to pay for the fees, for the judges. So we don't want that. And it's also on public record, which means people can search someone's name online, and they will see what court is handling their probate court case and what assets are being distributed, so that people who owe you or who say you went with their debt, they can also come to the court and ask for it. That's why you want to establish a trust. And people I work with, I'm able to share a link with you guys that you can get a 20% discount to establish an estate plan by yourself online. Yeah, and that's something that, again, I can offer to you guys as well. You're looking at about $500 to $800. You'll be able to establish a full estate plan. It will come with that financial power of attorney, healthcare power of attorney, and will. And you can update it as you get more children or as you add assets and houses. You can keep updating that for about $50, $60 in a year. So not bad. That's on the trust portion there. On life insurance, just 1 or 2 statements on it. There's 2 types of major life insurances in the US. You either have term life insurance, which is usually very, very affordable. For term life insurance, you'll pay about let's say an average about $30 to $50 per month will give you coverage for about 500,000 to about $1 million of coverage, depending with your age. It could be a little bit more, it could be a little bit less. So depending with your age, term life insurance, even if you've paid that $30 once, if anything happens to you at any time, then the amount of that death benefit will be paid out to your beneficiaries or to the person you listed as your beneficiary, for them to make sure the kids are okay, for them to pay down debt. If you have a mortgage, they can keep the house, or to replace your income. Because if you go, then you go with any money that you bring in the house so that your spouse doesn't feel like there's a hole and now they have to start doing 24-hour shifts or wishing they could do more than 24-hour shifts just to be able to sustain the life before you were there. Then there's permanent life insurance on the other side. And for permanent life insurance, there's different types of these out there. There's what we call whole life insurance. There's what we call variable universal life. There's what we call index universal life. And we can get into more details, but the essence of permanent life insurance, it does not expire. It lasts forever. You can build cash value inside of it that you can use while you're still alive. And for both, are accessible tax-free. Lastly, on the foundation here is manage your debts and liabilities well, whether it's student loans, whether it's car debt, whether it's credit cards. We can talk about strategies to get out of that hole, or sometimes people feel like they have to file for bankruptcy. But one thing that I usually say here on debts and liabilities is money going out is like you're bleeding. Money, it's like you have a wound and you're bleeding. Money that you're making by investing, it's like you're making that money. So you want to look at the interest that you're paying on your debt. Always know that interest. Always ask on any debt that you have, what is the interest rate? And we can discuss about refinancing, consolidating the debt, or figuring out when can you get out of debt. And we can put that in an Excel file and help people get out of debt. Otherwise, those are pieces of the foundation, and we can talk more again in private. But Tony, that's my time, and I can answer questions as they come or get to hear the thoughts of people listening in the background as well.
Wow. Super. I definitely have this to say that we've only probably scratched the surface of this conversation. I'm sure it's so deep, and you guys can see the structure there. We've barely scratched. We're not even in the wealth accumulation part, and all the way going to the roof, which is so important. As I said in my little video yesterday, I had like 5 conversations with Kennedy just to get to the point where I felt like he was so much of an asset that we all need to take advantage of, and that he's available to have a conversation with us. I'll probably get back to our sponsors, LemFi, one more time to see if they can sponsor another episode, so that we can be able to have another session, so you can probably take us through what has not happened, and so we'll find that out. For now, ladies and gentlemen, I would like to invite you to please interact a little, ask a question. I'm sure some of it might be out of what he has covered already, but some of it might be what he's yet to cover. So please come on in, ask a question, just unmute yourself and ask a question over the next 8 minutes so that we drop this. But I would like to also remind us that this episode is courtesy of LemFi, a money transfer platform. If you're joining us for the first time and you haven't signed up to LemFi, do that right away. The QR code is there, and you can use referral code Zandani. Okay, so on this Connect series, we will be bringing different guests, and we can be discussing different things. We've got a gentleman who is coming in soon to discuss real estate. We've got someone who is coming to discuss health. We had one on immigration, and so much has happened since that time. We might just have a refresher on how things are right now. And there's a lot of stuff that is happening. So we can always have these conversations. And remember, LemFi gives you the most competitive rates, high sending limits, 8,000 per day, 16,000 per week, 32,000 per month. You can send money to Kenya, receive from Kenya. You can do pay bill services, till number. All right. You can make local transfers as we do with Zelle and Cash App at 0 transaction fees. So you can send me money. If we are here in the US, we can send each other. And then you can send money to Kenya through a phone number, to Uganda, to Tanzania, to Rwanda. And you can also transfer money directly to someone's bank account. And then, of course, when you sign up, if you're signing up now, use the referral code Zandani. You can scan that code right there. You get $20 when you make your first transfer of $50. And of course, if you invite a friend, you get $20 when that friend signs up using your code, which will be created automatically. And then, of course, for every transfer that you make $50 and above, you earn some points, ni kama bonga points. Those ones you can redeem down the line. The other thing that I want to mention to you, as you sign up, make sure you tick the 2 check boxes so that you can be eligible to receive push messages. That also entitles you to participate in some of the giveaways that are happening. Right now, there's a flight voucher giveaway worth $2,000 to East Africa. So you can take advantage of that. All right. So let's hear from you guys.
Yes, this is Pipe. May I ask in Kiswahili?
Yeah, sure.
Okay. As an immigrant, maybe, for example, on the level of asylum, waiting, and limitless waiting and waiting and waiting. So what chances do I have for, or what chances do I have for investment, and what levels can I go to take a maximum benefit of what is available for immigrants to invest? Of course, at the backdrop of what is happening right now, and we don't know how long it's going to happen. I don't want to expound so much on that, but
Yeah,
I guess he has understood what I mean.
Yeah.
All right.
Yes, that's my question.
Wonderful. Yeah, great question there, Anthony.
Pipe.
Anthony Five. Yeah, Anthony
Yeah.
Five mwenyewe. So
Yes.
yeah, wonderful question there. So long as you have a tax identification number or a social security number, which is one of the things that the government watches so much to know if you make money by investing, are you going to be able to pay taxes? You are able to invest in one way or the other. There's some particular portfolios that you might not be able to have access to, or mutual funds, depending with what mtu ako kwa level gani on those, whether it's the type of visa, whether it's application, whether you have received a letter to show you have received it's in process or not. There's some layers that you can't get into until a green card is involved or citizenship. But I work with a lot of people who just have visas that expired 20 years ago, and we still are able to have them investing for their families and putting money away for their future. So it's never become an issue that we are like, we can't do something or we can't put money away for the future because of that. And you can also invest in places that are accessible. We call those taxable accounts, places that the money has not been tied until you're 59 and a half or 60 years old. So that if at any point you decide, okay, it's time to fire up and head out, the money is accessible to you within a day to 2 business days, and you can do whatever you want to do. So we can definitely discuss those in private, but short answer, yes, you can.
Sure. Thank you so much. There is a question coming in through Salome asks, as someone with existing investments in Uganda, including government bonds, how would you advise balancing continued investment there versus expanding into US markets for stability and long-term growth?
Great question as well, Salome. So definitely I'm not licensed to give advice beyond the United States and investments inside of the United States. I can only give advice on investments here. But one thing that I'm going to say is, one thing that I look at is what's the financial strength, what's the rating of different investments in different countries. Of course, emerging economies like our countries back home, the financial strength of bonds there are usually much lower. You're looking at C's and D's, And I hope this does not sound like Greek, but there's companies that usually put financial strength ratings on different bonds being provided. Bonds here in the US, you have more access to AAA ratings and Bs, which are more investment grade. So in terms of quality, you definitely want to look here. In terms of diversification, you having some assets back home is not a bad idea, just so that you are a little bit more diversified. But when it comes to strength, you're definitely looking at more into the US market. But diversification is always a good idea. We can discuss about that balance, maybe on a one-on-one call on how much should be there, how much should be here, depending with where you plan to retire, if you have kids and where they're going to grow up and things like that.
Yeah, question. I know you mentioned the issue of life cover. So I've always been curious. Most of our beneficiaries counting that they're back home and there is no guarantee that way most of them either way they will ever come and come here and all that. So in case whereby one takes life insurance and all that, where and how easy is it for them to access, whatever is left behind? Actually, that one has always made me hesitant actually to go for a life cover.
Oh, yeah, that's definitely a great question. Short answer to it, I'll start from this top. From the top, having someone that you care about, who you'd want them to get that money as beneficiary, putting them as a beneficiary is definitely worth it. It's definitely worth it, and either letting them know this is a document that you need to look at if anything whatever to happen to me, or this is my financial advisor. You can ask him questions about my finances if anything whatever happened to me. It's definitely very, very worthwhile. On the practicality of it, previously I've seen using the US Embassy in Kenya or in places that are close to them to be the place that they can verify identity. So they don't necessarily have to come here to pick up the money. It's a question of, can this person be verified to be the person that you also put on the beneficiary with their phone number or with their address and with their birthday. And the US Embassy can usually help with that. And then it's just a question of wire transfer, what bank can be allowed to cash the check that is sent to them. So is it the easiest thing ever with that? Probably not, but is it worth it 100%, especially because many people many people tell me if anything were to happen to me, I don't want people to laugh at my parents and say they thought they were successful, they were in America, now they have come back, they now look like us, they have come back to be our level. So it's definitely usually very, very worth it on that. But you also want to go with a strong financial company, which is a great thing, and we can discuss that. You want to go with a company that is going to be very devoted in doing what they say, so that it will feel very natural and humane through that process. Yeah. Wonderful.
Awesome.
Did I answer the question there, Wambogo?
Yeah. It's okay. I'll reach out. Then we can have that conversation privately.
Sounds good.
Thank you so much, guys. If you look at the screen right now, there is a wheel that is playing over there. It has the names of all you guys that have been participating in this. And I want to take this opportunity to just run a quick draw to those who participated so that we see who is a lucky winner. The first one, I'm going to offer the cup. I'll give three things. A cup, I'll give the water bottle, and then I'll give the towel dispenser. And then we'll end this. Are you guys ready? Let me do this as we wait.
Yes. Yeah, we're ready.
All right.
It's not rotating.
Salome, you get the first prize. Congratulations. So that will be the cup. And then let's see who gets the water bottle.
Congrats, Salome.
Thank you.
All right, rotating, and it's Magis. All right, Magis, I think I'm saying it right. I hope I'm saying it right. Magis, you get the water bottle, and then the person that gets the dispenser. Let's do that.
Congrats, Magis.
Okay. It's Katie. Congratulations, Katie. Yeah, please get in touch with me.
Yeah, congrats, Katie.
Get in touch with me so that we can organize how you guys are going to get your rewards. Thank you so much for participating, guys. This has been amazing. What I would like us to do is, for those that have won, please reach out to me. And now there is this one, which is the mega draw. I want to give some cash. Are you guys ready?
Marigis is saying that is tax-free. I want it.
Are you guys ready?
Ready?
Right.
Yeah.
Go ahead and roll. You know, when you don't have too many hands, you only have one opportunity to do
This
something.
one is mine. This one is mine.
I claim it myself.
Ta-da.
There.
Oh my goodness. Ifrith gets $100 courtesy of LemFi. Ladies and gentlemen, that is amazing. Ifrith, you're going to get $100 courtesy of LemFi. Once again, this has been a most amazing opportunity for us guys to have a conversation. I thank you so much for staying to the end of the conversation. Please make sure that you are using LemFi to make your transactions. It has the most competitive rates, guys. If there's any closing remarks, Kennedy, please. 1 minute.
Okay, yeah. So again, it's been a pleasure, and I just want to reiterate. Feel free to reach out to me. You can scan that QR code. It's going to pull up my information. If you want to write my phone number, that's 816-839-1871. That's 816-839-1871. Or you can also go on my website there. On my website, you'll be able to see my calendar, and you can just select a time that might work for you. I have some availability sometime next week, even though it's Christmas week. I have some availabilities on Monday, Tuesday, and Friday or the following. We can plan and connect. I'll be more than happy to share some clarity and confidence to you guys and help you get to your goals well positioned. God bless you so much, and thank you so much as well, Tony, for giving me this opportunity to share with our people.
Absolutely. Thank you so much. I really want to thank you again for coming through to be part of this conversation. To those that stayed to the end, thank you very much. It's actually everybody that started with us is still there. Thank you so very much for coming through. We'll be doing this more often. As Zandani Studio, we will be continuing to identify different speakers who can give us different ideas. And if you come across anyone that you think has information that you think would be helpful to our people, please recommend them to me. We'll be able to work out a session. And from me to you guys, thank you so much for participating and for being part of this audience. Please take advantage. Information is power. What you use out of it is up to you. God bless you and see you on the next. Ni Zandani Marekani, raw and uncut, nikiwapasha yanayojiri yanavyojiri yanapojiri.